Hey everyone, this is Elijah K. Johnson with Liberty and Finance. We are live here. This was not actually, I wasn't expecting this to be a live stream, but with everything moving so fast, we just had to do it. Our guest today is David Quintieri, the author of The Money GPS. David, thank you so much for joining us today.
Thank you so much for having me on.
It's great to have you. And what I first wanted to discuss is the markets, because I was just looking at the markets this morning when I got up, and gold was breaking through 2050, silver well above $26, and oil it's crazy. It's around 129. We were just talking before the interview. So your perspective on why everything is moving so fast right now?
Well, obviously, front and center is what's happening with Russia and Ukraine and the whole world. The geopolitical tensions have risen considerably over this period. And I think a lot of people are just trying to figure out, are we heading into World War III? Is that what this really is? Is that what's happening? I can tell you right now, on every measure of volatility, whether we're looking at the MOVE index, the VIX index, you just look at all these different things, they're all going up, up and away. It's unbelievable. Like, think about where oil was, let's say just a week ago, two weeks ago, let's say. And now today, nobody would have ever predicted that we would get here this fast. Underlying all of that is what's happening with the Federal Reserve and inflation. So we've got that to deal with. And on top of that, we add this situation. I mean, it's just crazy.
Definitely. I think it's completely unexpected what we're seeing. Let me just share the screen here to get the price of gold up here. 1 second here. So what we're seeing right now is just this spike in the gold price. And we're seeing this across markets, as you mentioned, also in oil as well. And we're seeing, I guess, silver now. It's crazy. Yeah. We're showing a right above $27 here. So your perspective again on this, like, I guess it's the Russia-Ukraine situation mainly, but is this going to continue? And what kind of prices are you looking for in gold, silver, and oil going forward?
Of course, it's hard to predict. I think as long as the tensions are staying hot, then the price just keeps going up. I think that's what we can expect. For gold and silver, especially for gold, I always have this line that says, when all else fails, then they turn to gold. So it's like, oh, that's a barbarous relic. Nobody wants that thing. It doesn't bring you any income and all this. And you look what happened through, let's say, 2020 into 2021. It was all these hot stocks. Everybody's going to be using Zoom. Nobody's going to be working from home ever again. This is the future. And then what happened? All of those stocks have gone back down to the levels that they were at in 2020. And what's happening today? We have chaos, we have concern, we have tension, gold goes up. So it is very normal, in a sense, what we are seeing with gold. And then silver, I think, kind of rides its coattails along. Not that it's not important at all, but I usually find that we have gold that experiences this big surge, and then later on silver follows behind and usually goes in a more exaggerated fashion. When it comes to oil, I think it is very clear, and everybody knows this, that Russia is a huge exporter of oil. If they are cut off from the world markets, this is going to be intense. I don't necessarily think that's going to happen. I think Germany would be in very big trouble if that's the case, because nearly 60% of their oil, gas, it's coming from Russia. They can't be cut off. But we see what the US is doing, and we were just talking about it a couple of minutes ago. The US is saying, okay, we're going to cut off imports coming from Russia. Now that's mostly symbolic, okay, because there's not much coming that way. But what it does say is we're severing our ties with this country. And that's important. So people need to be aware of what's happening here. And I think it's just going to be step after step after step. So every day we're going to get a new piece of news until we see some sort of handshakes happening between Ukraine and Russia. That is so important. They're doing these, I think, 3 rounds of talks so far. Nothing has really been coming up at all. And that's, of course, not good. We need to see some developments. That's what I think will start to send the prices down. And I think oil price if they come to some sort of conclusion or at least a step in the right direction, I think the oil price can come down a bit, because we are definitely very over exaggerated at this point.
Definitely. And you mentioned how also, the US is looking to ban Russian oil. Are you seeing that this is going to have any impact on the price?
I mean, not more than the speculation around it. There just isn't that much coming that way. So it doesn't have much of an impact in that regard, but it adds to the tensions. So that's why you see that occurring, right? But if I look at it right now, I mean, it's at nearly $129 a barrel. The price has been basically surging every single day. And I don't expect it to necessarily let up until we see a few handshakes. That's what I'm looking for. Until that moment, it could still be going higher and higher.
Now, in a recent video you did, you mentioned how war will bring a global recession and then hyperinflation. Can you expand on this?
Yeah, so I mean, it's unfortunate what we're seeing regardless, but if this becomes a full-scale war, which it's a proxy war right now, I mean, the world is sending money and munitions to Ukraine, and Ukraine fighting against Russia. So what I worry about is this, that, that we get into the next level. And if that's the case, we go into a major period of inflation. We're already dealing with inflation. We have trillions of dollars that have come through since the financial crisis, printing up the money as well as the fiscal side. I mean, just look at what happened. More money was pumped into the system in that short period of time than ever before in history. I mean, it's unbelievable, both the fiscal and the monetary side. So what this does is, of course, it creates price inflation. We know that later on. But what we're seeing now, I think, is, of course, whenever you run into these periods of war, it usually ends up in ruining the currency. I mean, it's just a matter of fact. Now, you can ruin a currency by putting sanctions on a country. You look at Iran. Iran has like basically the most sanctions you could find. Everything is sanctioned, every aspect of the economy. It's not like Russia. Hey, we're going to sanction, this company, or we're going to sanction Putin. No. This is like the whole next level. And their currency is almost worthless. Let's say 5 years ago until today, we're talking about like 10 times the level of devaluation just because the sanctions are there. So sanctions can ruin a country very badly, and the currency. But we see what's happening today. And I think this ultimately leads, every single time, it leads to the destruction of that currency through the process of inflation. And you just see that in the US, it happened twice before. And so it can happen anywhere. I worry about that. And certainly the US is the military superpower, and I got that. But you never want to see this happening because of the long-term effects. We hope that this is resolved very quickly so that we don't end up getting into that moment where we're, worried about hyperinflation. We're already dealing with heavy inflation today, highest we've had in decades. We need this to stop.
I'd like your comment on this viewer's comment here. They say this has nothing to do with war. This is the monetary system being replaced under our noses. So I think what he's getting at there is that this inflation that we're seeing, this rise in the prices of commodities and precious metals, was bound to happen anyways because of the monetary system changing and being inflated and all that. And war might just kind of be, I guess, the final thing that caused this to happen. But your perspective on that, is it mainly actually a more fundamental issue than the momentary the war that we're seeing right now?
Well, I mean, if you look at what's happened since the financial crisis, like I said, they're pumping money in left, right, and center. The effects we're feeling today are not because of even what happened over the past 2 years. It's because of what happened since the financial crisis and what happened since 1971. But you can't directly see that. I can't show you a chart and say, look, the effects we're having are exactly in proportion to the event that happened on this day or that time. But we know that. I mean, I wrote 2 books about that. You see what happens over this period of devaluation. Of course, you're going to get higher prices. Of course, you're going to have a devaluation of the currency. It's a matter of fact. But when you look at it on a more short-term scale, you see the tensions here. what happens? Money from these different funds, they start to find, okay, maybe now tech stocks are not the right place to put our money. We're going to start putting it in gold. We're going to start putting it in oil companies and so on. So there's a short-term effect and there's a long-term effect. And I think it's important to see that. Okay. So the long-term effect, certainly, yeah. You print money, you devalue the currency. I mean, you and I know that, and the people watching know that. I don't think the financial world seems to know that because they said that. I mean, it's been very clear that printing money apparently doesn't cause any harm. So I guess we're the minority in the situation.
Now, what I'm going to do here is just again share the screen here for the gold chart. We're within about, depending on where you find your spot price, around $3 to $10 of within that of the all-time high of gold around 2070. So your perspective on this, do you see gold making an all-time high even possibly today?
Yeah, it looks like it's going to be I mean, like I said, there's nothing going to stop it until we see some handshakes, until we see some resolution. So it wouldn't surprise me. I mean, you got to remember, look at all of these commodities. Look at gold and silver, sure. Look at palladium. Look at, I mean, just name a commodity and tell me where it was recently. I mean, gold and silver are in some cases the worst performing, and they've done very well. Like, just look at anything. Look at lumber. I mean, just pick a commodity. It's gone absolutely berserk. The fact that gold and silver are where they are today, and like I said, again, it's done well. But compare that to some of these other ones. We know the manipulation is there. We know that. GATA, they do all of this. They've looked into the data and they have that information. They've made that public, and we know this. There is an unlimited scale into what they're capable of, and they've pushed this price down. But right now, they seem to be having difficulty with that. That's why the price can actually turn around very quickly, because it's the paper markets. You and I, we have the physical metals. That's the real stuff. The price you see, a lot of times that's talking about the futures markets, and you see that it can go up and down and all this, but the physical metals are always in high demand. Always. They're always having a hard time producing the coins. Why? Because as soon as they're minted, people are buying them up. People who know what's really going on. Now, I'm sure right now today, you see the price of gold rising. Now suddenly people catch wind of this and they go and run to the bullion shops and they try to buy it up, and there's a shortage. But people have been always buying this all along because they know what's going on. They know we need to have real, physical, tangible assets.
This viewer is wanting to know, do I need to get more right now or should I wait? So your perspective on those looking to invest in precious metals, it seems like, we're pretty much at an all-time high for gold right now. Is it prudent maybe to start at least accumulate a little bit right now? Or your perspective on that, should people be waiting for a pullback?
Yeah, so who knows where it's going to end up before a pullback? That's the concern. I've always said to people that, to me, the price doesn't matter. It's not a factor whatsoever. I never look at the price of gold and silver and think, when's the right time to buy? Should I sell or anything? Because in my belief system with precious metals is that this is savings. This is savings. The hold time is indefinite. The whole time is basically you want to keep this and pass it down to the next generation. Cultures of the East, they do this. They take those coins, they take the high carat jewelry, they take all the, bullion, whatever it might be, and they pass that down. So the price today doesn't really matter. If you can afford it, if you can handle this, then, in my opinion, you should have some. You don't want to have, as they say, all of your eggs in one basket. But certainly if you don't have any, I mean, there was a lot of opportunity to get gold, let's say at 1800. And, see how quickly we went from 1800 now to well over 2000. 2100 should come, it looks like, pretty soon. So, I'm not here to give financial advice, but I would definitely say that people certainly need to be accumulating. I think silver probably has a better upside potential in the short term. There's no doubt about that. But like I said, there's manipulation too. I just think that, you have to have some, you have to hold on to that indefinitely. That's like, we shouldn't be trying to okay, let's buy in today and let's sell it off next year because we're going to have physical metals and hopefully pass that on to the next generation.
That's so key that it is savings first and foremost. And I think, yeah, it is important. We can't give financial advice like you mentioned, but I think it's, at least for myself, it's important to have some savings, right? Regardless of what the price is at any particular moment. But one other question I did have for you right now, you'd recently posted on your channel about the ties between Russia and China and how, because of banning of cards, certain cards in Russia. Now Russia is moving to use Chinese credit cards. Your perspective on that and how it might strengthen ties between Russia and China and what that might mean for the US and the rest of the Western world.
Yeah, they're really pushing Russia and China together very closely in every way. So as you know, the SWIFT system, the IMF, like any organization or institution or facility or anything, it's all basically owned and controlled by the West, specifically the US. So you got the SWIFT system that is like, I like to think of it like the roads and highways of the financial system. And the US is in control of it. So they say, oh, you're being bad, Iran, you're banned, you're gone. So now if somebody is in Iran and needs to get money to family that lives overseas, they got to put it in their pocket and they got to get onto an airplane and bring this stuff over. That's literally what we're dealing with today. So the same thing is, potential today with Russia. I think it's a lot bigger than that. And, you're basically, what you're doing is you're, in a sense, forcing China to speed up the process and getting away. I think it's a CIPS that they have their own CIPS, and that they're going to be building that up, and they're going to have more countries that are interested in dealing with them, in dealing with other countries that the US is saying, no, you're bad and this and that. We need to be working together. We need to be figuring out a way to have our own, like everybody's going to disagree on this or that, but we need to find a balance. Look at Vietnam. Was it fantastic to send troops over there and, spray Agent Orange over the top of them? Is that something that was positive? No. Now they're a trading partner, and now both sides are better off. So I think it's important to look at where we are today, where we've been before, and try to figure out, what's going to happen with China. They're going to continue to grow. They're going to continue to become more powerful. And this is happening at the end of an empire. I'm listening to the audiobook right now, The Changing World Order by Ray Dalio. I think everybody should read it. And he talks about the empire's growth, and he makes it very clear in there. So far, I'm only about halfway through, that what we're seeing right now with the United States is very worrisome, because at the end of an empire, things get crazy. Things get real crazy, and they start to fight for what they have left. And we don't want to see that. Definitely don't want to see that. Okay, what we're seeing right now with Russia, this is not Afghanistan. This is not Iraq. This is something much bigger, and we need to be just, real cool. Let's say that.
Now, a lot of people have mentioned how Russia, or I mean, China will probably be the next biggest economy, right? It'll be the #1 economy in the world. Now, what does that mean, I guess, for the average person in the US? How is that going to impact them, especially if China kind of gets on board with them as well?
I think,
Russia gets on board with them as well.
yeah, for sure. Like what we're seeing right now is that, so many decades ago, you had China basically being set up as the manufacturing of the world, and their systems are absolutely fantastic for logistics. They can get stuff to you in the United States faster and more efficiently and more customized than it can happen in the US. Like, think about that, coming from halfway around the world, and yet they could do it better and faster in many cases. So the United States and most other Western countries basically said, let's just let them deal with the manufacturing. It's going to be better off, okay? And that is unfortunate, as we see from the tariff war and then through 2020 with all the supply chain crisis and everything else. Not a good idea. So I think that what China is doing right now is they're building up their end. They are making, basically their situation is essentially looking fantastic for the future. They're building up their manufacturing and they're creating domestic consumption. So no longer in the future will they need as much of the exports. They'll have more of the imports because their own people are going to have more disposable income. So when they have more disposable income, they can buy the trinkets and gadgets and all these different things. So you've got, almost, what is it, 1.4, 1.5 billion people. That's a lot. That's significant. So even if a relatively small amount of people are doing one action, think about that's millions and millions and millions of people starting to get on with that. And I think that China is very, very clearly, they are, looking for domestic consumption, meaning we don't need to export. They're closing down. If you look at what China is doing, they opened up, but I think they're now starting to close down a bit and they want to get tight. And I think, my opinion, if you look at what they were doing, I noticed many comments about this recently, and I had talked about it before. They were stockpiling food. They were stockpiling a record amount of food. Before, this is like just before what we're seeing now. Maybe they knew what was going on. I don't know, but they're ready and they're getting prepared. And I think they're closing down and they're going to have a few select partners, and they're hoping for domestic consumption. I don't know. We'll see what happens, I guess.
And for our viewers just joining right now, we're with David Quintieri, the author of The Money GPS. We're reporting on this unprecedented move in precious metals, gold pretty much at an all-time high, silver breaking out as well. I guess before we let you go, David, any last thoughts on this, what people should be concerned about right now and how they should be taking action?
So basically, what I was very concerned about throughout 2020 into 2021 was the consistent, absolutely consistent message from people that were saying, look, Zoom stock, this is the future. Nobody's going to be working from the office. Everybody's going to be working from home. And the price just went up to astronomical levels. Even the CEOs and all this of the company, not just Zoom, they were saying, we don't know why this is going like this. We have no idea. Even they were shocked. There was all these so-called darlings of the pandemic. Look at Peloton. Look at all these companies. They're back to the levels they were at. All of those gains that they experienced are gone. So if you held on to that stock that entire period of time, you bought at the very bottom, and then you bought it, rode it all the way up and rode it all the way down. Now you lost out. Why? Because this is not diversification. This is not intelligent investing. What do we got to do? We have to hold on to different assets. It is very important to hold on to different assets. All of those assets don't perform well at the same time. You can't measure your portfolio over a year and say, look at how well it's done over this year. I want the thing that's going to do the best this year. No, you've got to look at it over a decade, over 5 decades, over your lifetime. And what's going to be the best thing? It's always a diversification in your strategy. So you're going to be holding on to precious metals. You can have real estate. You can have paper assets. You can have cryptocurrencies like Bitcoin. It's all dependent on what you desire. Of course, I think you're better off to have something than to not have it, because you're going to feel this fear of missing out, of course. And you don't want that. You don't want that fear of missing out. It's not something that, is going to... having that fear of missing out is not going to really, what's the word? You're going to make rash decisions. If that's the case, you're going to go in and you're going to, I need to get into Bitcoin right now. 65,000. You get in at 65,000. What happens? It goes down to 30,000. If you had a little bit beforehand, you might think, okay, well, you know what? I didn't get in at this point, but at least I got in. Got some of it. I'm happy. But if you try and ride the wave, when the hype and the euphoria, it's always going to bring you to a point in which you're making these decisions that are not wise long-term. So I think that's it. I think diversification is always a strategy. And even diversification, if you look at the precious metals, diversify within the precious metals. Don't hold just one type of gold coin. You can have, let's say, silver. You can have maple leafs. You can have bullion. You can have very small denominations. You can have junk or common coins. I mean, even within the asset class, you should be diversifying. And I'll mention this right now for everybody watching, whoever stayed this long in, what we're seeing with the price of oil. for instance, the price of oil has skyrocketed, but the mining, those companies, they've done well, but they have not done as well. So we could see, based on the way that the valuation, the metrics that are being used for these companies, we could see the prices of these companies go much higher. So do your own, look into that due diligence and so on. The same thing could happen with precious metals, and you don't turn a mine on in a second. That takes a long time. So, this is important to be paying attention to. I think the different mining companies could be very attractive.
All right. Well, David Quintieri, really appreciate your time today on this unprecedented move in the metals that we're seeing. Your perspective, I guess, any last thoughts you had, and where can our viewers find you online if they're interested in learning more?
Absolutely. Yeah. Pay attention to what's happening with Russia and Ukraine in terms of the cooperation, the handshakes, the deals, anything that's happening there. That's going to affect the prices that we're seeing. Absolutely. If people want to find me, it's The Money GPS. Search me on any platform, The Money GPS. And thank you very much.
David, once again, thank you so much for your time, and God bless.
Thank you.